This past week has been a breath of fresh air for the cryptocurrency market. We are seeing a steady and encouraging recovery across the board. The general feeling is one of cautious optimism. It seems the prolonged crypto winter might finally be thawing. The total market capitalization has climbed significantly, pushing past the $2.5 trillion mark, a clear sign that money is flowing back into the space. Investors who were sitting on the sidelines are now starting to re-enter, driven by a growing sense that the bottom is behind us and a new cycle is beginning. This isn't just retail enthusiasm, the big players are making moves again. One of the most significant stories of the week is the renewed interest from institutional investors. Major investment firms are once again allocating portions of their portfolios to digital assets, particularly Bitcoin and Ethereum. This is a huge vote of confidence. We're also seeing a healthy increase in the circulation of stablecoins, which often indicates that traders are preparing to buy other cryptocurrencies. It's like they are loading their accounts, getting ready for action. On the regulatory front, the news has been surprisingly neutral to positive, with no major crackdowns announced, which has helped calm the market's nerves and build a more stable foundation for growth. The world of decentralized finance, or DeFi, is also showing impressive signs of life. The total value locked in DeFi protocols has surged, nearing its previous all-time highs. This tells us that users are not just buying and holding crypto, they are actively using it for lending, borrowing, and earning yield. This utility is crucial for the long-term health of the ecosystem. It proves that crypto is more than just speculation, it's a new financial system being built from the ground up. This renewed activity in DeFi is a strong bullish signal that suggests the recovery has real substance behind it. Overall, the market sentiment has shifted dramatically. Gone is the extreme fear that dominated conversations for months. Now we see a more balanced, hopeful outlook. The Crypto Fear and Greed Index has moved firmly into the greed territory, reflecting the positive change in mood. While this is a good sign, it's also a reminder to remain level-headed. Markets can turn quickly, but for now, the trend is our friend. The combination of institutional inflows, stablecoin growth, and a booming DeFi sector paints a very promising picture for the weeks ahead. Bitcoin has been the undisputed leader of this market recovery, showing strength and resilience. As of our update today, June 29, 2025, Bitcoin is comfortably trading around the $72,500 level. This represents a solid gain of over 8% for the week. The price action has been very constructive, forming a series of higher highs and higher lows on the daily chart. This is the kind of steady, non-volatile climb that institutional buyers love to see. It suggests a move driven by genuine demand rather than speculative frenzy, which is a much healthier foundation for a sustained rally. Looking at the technical indicators, the picture remains bullish. Bitcoin's price is now trading well above its 50-day and 200-day moving averages. These are key long-term trend indicators, and when the price is above them, it's a strong signal that the asset is in an uptrend. The Relative Strength Index, or RSI, is hovering around 65. This shows strong buying momentum, but importantly, it is not yet in the overbought territory above 70. This suggests that Bitcoin still has more room to run before it becomes overheated and due for a correction. For traders, key levels are coming into focus. The immediate support level for Bitcoin is now found near the $70,000 psychological mark, which was a previous resistance. If the price were to pull back, we would want to see it hold this level to maintain its bullish structure. On the upside, the next major resistance is looming at the $75,000 price point. A decisive break above this level could trigger the next major leg up, potentially sending Bitcoin to retest its all-time highs. The outlook remains positive as long as we stay above that crucial $70,000 support. In summary, Bitcoin is in a great position. It has reclaimed key technical levels and is showing sustained buying pressure. The narrative of Bitcoin as a reliable store of value or digital gold is gaining traction again, especially with big money flowing in. While no rally goes up in a straight line, the path of least resistance for Bitcoin currently appears to be to the upside. We will be watching that $75,000 resistance level very closely in the coming days, as a break above it would be a significant milestone for the market. Ethereum has not been left behind in this rally. In fact, it has shown impressive strength of its own. The second largest cryptocurrency is currently trading around the $4,100 mark, posting a respectable gain of nearly 10% this week. Ethereum often follows Bitcoin's lead, but this time it seems to have its own powerful drivers. The successful implementation of recent network upgrades has boosted confidence in its long-term roadmap. Investors are increasingly seeing Ethereum not just as a cryptocurrency, but as the foundational layer for the next generation of the internet, Web 3. From a technical standpoint, Ethereum's chart looks very promising. Similar to Bitcoin, its price has decisively crossed above both its 50-day and 200-day moving averages. This confirms that both the short-term and long-term trends have turned bullish. The RSI for Ethereum is around 68, which is slightly higher than Bitcoin's, indicating very strong buying momentum. While this is close to the overbought region, it reflects the high level of excitement and capital flowing into the Ethereum ecosystem, particularly into its DeFi and NFT sectors, which continue to thrive and innovate. The key levels to watch for Ethereum are quite clear. The immediate support can be found at the psychological level of $4,000. This was a significant resistance level that was recently broken, and according to technical analysis principles, it should now act as a floor for the price. As long as Ethereum can hold above this level, its bullish outlook remains intact. Looking up, the next major hurdle is the resistance zone around $4,400. A clean breakout above this area would signal a continuation of the uptrend and could open the door to a test of its all-time highs near $5,000. In conclusion, Ethereum is performing exceptionally well, fueled by both the overall market recovery and its own fundamental strengths. The activity on its network remains robust, with transaction volumes and DeFi engagement on the rise. This shows that the demand for Ethereum's block space is real and growing. As the world of decentralized applications continues to expand, Ethereum is poised to be a primary beneficiary. Its performance this week is a testament to its critical role in the broader digital asset ecosystem, making it a key asset to watch. While Bitcoin and Ethereum have been leading the charge, several altcoins have posted even more spectacular gains this week. One of the standout performers has been Solana, which has surged by over 20% to trade around $180. This rally is backed by strong fundamentals, including a series of high-profile project launches on its network and increasing developer activity. Another coin-making headlines is Avalanche, which is up approximately 18%. Its focus on subnets, or custom blockchains, is attracting a lot of attention from gaming and enterprise applications, driving demand for the AVAX token. Another area that has seen explosive growth is the AI and crypto intersection. Tokens like Fetch.ai and SingularityNet have seen significant rallies as investors bet on the convergence of these two groundbreaking technologies. These projects aim to build decentralized artificial intelligence services, and the narrative is clearly resonating with the market. It's important to remember that these smaller-cap altcoins are much more volatile than Bitcoin or Ethereum. Their gains can be impressive, but they also carry a higher level of risk, and their prices can fall just as quickly as they rise. This brings us to a crucial point, a word of caution. It's easy to get carried away by the excitement of a bull market, but it's essential to remain disciplined and responsible. The cryptocurrency market is famously volatile. Prices can change dramatically based on news, regulatory shifts, or broader macroeconomic factors like interest rate decisions. Never invest more than you're willing to lose. It's a cliché for a reason. It's sound advice. Avoid making emotional decisions driven by FOMO or fear of missing out. Stick to your investment plan and take profits along the way. To wrap things up, this week has been overwhelmingly positive for the crypto market. We've seen a strong recovery led by Bitcoin and Ethereum, with significant institutional interest providing a solid foundation. Exciting altcoins are also showing incredible potential. However, always remember the inherent risks. Do your own research before investing in any project. Understand its technology, its team, and its tokenomics. By staying informed and cautious, you can navigate this exciting market more safely and effectively. The future looks bright, but a smart investor